funny where I always talk about the CTS system. And anybody a CTS trader? Combined technical score. So I think the CTS, right? So it's the combined technical scoring system. For you guys that are not familiar, it's a system. It's a quantitative way to gauge your trading, right? So there are specific technical approaches that we have in the system. I believe that you should customize it. If there's something you like, add it in, assign it a point score. If there's something you don't like, take it out. So for example, we talked about Richard earlier and Tony and valuing the 50% retracement, right? There's a section in Fibs that say, or a section in the CTS section that says, Fibonacci confluence, meaning that you have Fibonacci levels lining up at whatever that zone is. Maybe if you have a 50%, maybe you assign that a higher value instead of being a 1-point Fib score, it's a 2-point Fib score. Or some people have taken out RSI overbought or oversoldness because they don't use the RSI, but maybe they've put in psychological number, right? So it's customizable based off of what you use and what you value in your trading. But the original point of it was to really create consistency, right? One of the problems that traders get into is that they're all over the place, right? We know my formula. Consistent analysis plus consistent execution equal consistent results, meaning if you consistently look at the markets the same way and look for the same trading opportunities, and if you can actually consistently take those trading opportunities, right? You don't self-sabotage and get hit with, the fear of entering or fear of missing out. So not entering a trade because you're scared or entering too early because you're scared of missing out, right? If you analyze consistently and you execute consistently, you should expect to get consistent results. And if you've done any work in actually back testing your strategy and ensuring that it has a positive expectancy, those consistent results should leave you in profit. It's a very simple formula. One of the bigger problems that traders have is that, especially ones that don't have a set plan of action, don't have an IPDE process to follow, or don't have a specific trading strategy that they're using, is they look at the market in different ways each time, right? So maybe Monday they come in and they start off on a 4-hour chart and they're looking at using Fibonacci's and this and that. Now Tuesday they come in and they start on a weekly and they're looking at structure. Wednesday they come in on a 5-minute chart and they're looking at pivot points, right? Have you guys ever been there where it feels like you're doing something different every day? Whatever you see on YouTube in the morning is what you do. Someone said pivot points. Where's the S1? Right? There's no consistency in your approach. So what you're doing is you could be seeing valid setups, but you're seeing different valid setups each day. And when you're inconsistent, you're not executing your edge, because you could have a losing day trading structure on Monday, and then structured trades could be booming on Tuesday. But because on Tuesday you decide to focus on pivot points on a weekly chart instead of structure, support, and resistance, supply and demand on an hourly chart, now you're missing those opportunities because you're looking elsewhere. You're looking at something else. It's like people that I don't play the lottery. I think it's a waste, but you'll have people that play the lottery and people that get, they'll religiously play it every day, and then one day they won't play it, and then all of a sudden the day that they don't play it, their winning number appears. That's a horrible analogy because that's a complete gamble, but kind of like that, where they were supposed to be doing the same thing, and if they only would have done the same thing, they would have been taking advantage of it. Right? The CTS system gives you a set checklist of what you should be doing. And if you're like me, I do it in the same order each and every time. So it's boom, look for this. If we have this, you get this many points. Look for that. If you have that, you get this many points. Look for higher time frame confirmation. If we have that, we get 2 points. Major and minor structure. Major structure gets 2 points, right? Minor structure gets 1 point. Do we have Fibonacci confluence, right? Draw my fibs on. If we have Fibonacci confluence, give myself 1 point. Look for RSI, right? And you go through the entire list and give yourself a point score. And when you do that, you can quantify what counts as a good trading opportunity and a bad trading opportunity. And you can do it pretty simply, right? If you have a score of below 3, right, you can say that that's a bad trading opportunity. Why? Because out of everything you went through and all the points you added up, you only got 3 points. So what does that tell you? That means that you have a lot of kind of evidence pointing in the right direction, or a little bit? A little bit of evidence, right? If you have a higher CTS score of 12, does that mean you have a lot of evidence or a little bit of evidence? It means you have loads of evidence, right? Therefore, the CTS score of 12 is a better trading opportunity than the CTS score of 3. And you can kind of quantify them on which you don't take. I don't take anything under 3. You can change your position sizing where it's like, hey, if I have a CTS score of 4 to 7, I trade a half position. But if I have a 7 to 12, I trade a full position, something like that, right? Because now you're risking more on your quote unquote better trading opportunities and you're risking less on your quote unquote worst trading opportunities. It develops a consistent approach. What I learned through CTS is, right, when I was doing it, because I'm going through the checklist the same exact way every single time, is that it really developed a routine. It developed a habit, right? Now, every time I went into the charts, I looked at the charts the exact same way every single time, right? It's very familiar to when, playing sports. Like in football, when I line up as a wide receiver, you do a few things. You check where you're lining up. You check with the ref. Are you on or off the ball? You look at the cornerback, right? How's the cornerback playing? You look at the safety. Is the safety 12 yards and deeper or 8 yards and closer, right? You go through kind of your checklist where it's like, if I see that, then it means this. If I see that, then it means this. If I see that, then it means this. And of course, you would hope your quarterback's doing the same thing. And that's how you get on the same page. And what happened to me with, I guess with football too, with any sport, but with trading as well, it becomes automatic. It becomes part of a routine where you get very comfortable doing everything the same way. So if you notice, I always, whenever we're doing AB equals CDs, right? Because this is how I did it in my CTS, I would draw out an AB equals CD. And then the very next thing I would always do is what? What comes right after it? After you draw out your AB equals CD or your equal measure move, right after that comes your Fibonacci extension. And the more comfortable you come with your routine, the more comfortable you become in your analysis, the more comfortable you become in your analysis, the more confident you become as a trader, the more confident you become as a trader, the less mistakes you make, the more money you keep. Boom.